Yeah, so just repeating for hold on, but I know it. So we're live now, gentlemen. We weren't live before. My apologies. All right. Yeah, man. Manners, Andre. Manners. Night, night. Yeah, so for those that are live, I'm just repeating. We usually wait like 2 or 3 minutes because well, we are live, 2 or 3 minutes, so that more viewers can come on and then we'll start. So, you can get your juice, get your food, get your Thursday, Friday, and and join us in about 2 minutes. David, you hearing me? Yeah, man. Big up Trevor, Christoph, Deidre. What's up? About a minute and a half left, guys. Night, Kadia. Kirk, you hearing me?
Simon,
All right, cool. David.
yeah.
David was saying his internet was and my internet moving sloppy as well, So, yeah. David. All right. So Ramon and Julian, we can start in about 30 seconds. So let me just start with the introductions, and then Julian will come on. Welcome again, everyone, to our August meeting, our August session for Stocks on the Rocks. Happy to have you here. This is a place where we all come to learn and discuss. So not just because we are the only ones online. Feel free, those on Facebook, YouTube, and Twitter. Um, feel free to comment and ask your questions. So how the night will basically go is we have the VP of Barita Investments, Mr. Ramon Small-Ferguson, who is just going to run through a short presentation of the APO, and then we'll be asking, and yourselves will be asking him some pertinent questions as it pertains to that. We have David Rose and Hartner Richards, who will be just doing a market review for us, going through what has happened in the stock market, or even the overall economy for the past week and usually for the week before, you know. And then the last segment is really about a discussion into national finance debate from last night. So we're going to discuss our views. We have some numbers that we can present, and yeah, we're going to go through that. So we have three main segments tonight. Um, yes. So, Julian, Ramon,
Good evening, everyone. Thanks for joining us this staging of Stocks on the Rocks. We're really happy for the support. So I'll allow Mr. Small-Ferguson to go through his presentation so he can bring us up to speed with the Barita APO and the value proposition that this offer has.
All right, good evening, everyone. Just checking if everyone can hear me.
Good to go, Ramon.
good to go.
All right, thanks. Well, first of all, thank you very much, Simon and team, for having me. Good evening to the viewers out there. Very happy to be here to have a discussion with you this evening around Barita's additional public offering of shares, which opened on Wednesday of this week and is slated to close on the 16th of September. So I'm just going to share my screen, go through a brief presentation, then I guess I'll take some questions. All right? Again, I'm just checking if everyone can see my screen.
Yes, Ramon.
All right, great. All right, so I'm going to start a bit by just reminding some people and I guess letting some people know who Barita is. So Barita Investments Limited was founded in 1977 by Mrs. Rita Humphreys Lewin. We are one of the oldest stockbrokers in Jamaica, and we are really at this point in time a full-service asset management and investment banking firm. So majority stake in the company was acquired from Mrs. Humphreys Lewin by Cornerstone Financial Holdings Limited, an entity which also, coincidentally, the principals of the entity also own the last remaining merchant bank in Jamaica, Cornerstone Trust and Merchant Bank. The company was founded by Mr. Paul Simpson. The entity owns 76.5% stake in Barita, and Barita in turn owns 100% stake in Barita Unit Trust Management Company, which is the fund manager within the group. So that entity manages the unit trust, pension fund, etc. Notably, today is an important day in Barita's history as it marks the second anniversary of the acquisition by Cornerstone. So a coincidence that I'm presenting today, right? So who are we? I mean, the new Barita 2.0 post Cornerstone has really kind of come up with a brand identity that we think describes us and what we're about, right? We have described ourselves as being bold, which really cuts to the core of what we do. We try to innovate. We want to do things differently as a securities dealer, as an investment bank, as an asset manager. We're smart, which really, again, cuts to our people. We're very focused on talent, and that shines through with the type of people that we recruit and retain. And finally, we're game changing. We're not about doing things the same old way. We constantly try to challenge the status quo across the board in terms of what we do as an organization, right? So I want to talk a bit about some of the key strategies and pillars that have been instrumental to our post-acquisition performance. And the first of them, I mentioned it briefly on the previous slide, but it's talent. We have a comprehensive talent management program that's really focused on putting together a team that's comprised of the best and the brightest, a team that has tremendous synergy, that really can allow us to differentiate ourselves and provide differential value to all our stakeholders, be it our customers, be it our shareholders, or be it the team themselves, right? So that's really core to what we do. Secondly, we have been very focused on increased brand awareness. I mean, I don't think anybody has escaped knowledge of Barita and what we do. We've really been focused on our brand awareness across both traditional and non-traditional channels, and it's been paying off in terms of the business that we've been able to generate from that. Thirdly, the organization has also been focused on increasing its capitalization. I mean, over the last 2 years, we have raised a total of 10.2 billion in permanent capital, and naturally we're going for some more. And we think this is really instrumental in endowing the company with the capacity that it needs to take on the ambitious strategic objectives that have been set for us. And finally, we have focused on streamlining our investment management and trading architecture. I mean, we're an investment firm after all, and this really is central to what we do. And as we go forward in the discussion, I'm going to have a discussion around the numbers of the company year to date. You will see how this has been paying off, right? So to the financial performance. So Barita's year-to-date performance really captures the period October 1st, 2019 to June 30th, 2020. You can appreciate that, I suppose, the majority of that period has really been colored by the impact of the unfortunate onset of the COVID-19 pandemic, the impact on economies, on markets, on our business itself in terms of how we interact with our customers, how we interact as a team, etc. And really, how we would have described or how we describe our performance to date is really, resilience that comes to mind. We have continued to change the game, so to speak, which is one of the elements of our brand identity. And as a result, we've been able to create and preserve a good bit of value for our stakeholders. So to talk about the revenue picture, so revenue is up almost 35% year over year. And if you see the constituents of revenue there, you can see that it is really representative of a lot of core areas of income for us as a securities dealer. So the largest contributor to revenue during this 9-month period to June has been fees and commissions income, and that is largely comprised of fees from our asset management business, what we're paid to manage money, our investment banking business, the fees we've been able to generate from, doing financing on behalf of our corporate clients, and our brokerage business, which really deals substantively with our trading on the stock exchange. I mean, notably, when Barita was acquired by Cornerstone, Barita was probably the 6th or 7th largest broker in Jamaica. Year to date, we are about number 2 in terms of value traded. So that's an important step up. Moving to the foreign exchange trading and translation gains business. So this really relates to the activity primarily from our Cambio business. And, again, when Barita was acquired by Cornerstone, Barita had the 5th or 6th largest Cambio in Jamaica. We now have the 3rd largest Cambio by market share, and it shows in terms of the significant uplift in the revenue from that area. Right? The third revenue bucket, you look over here, is in relation to gain and sale and investment activities. And this is really revenue generated from the management of our on-balance sheet portfolio, what we generate from trading, etc. And you can see year over year, this is actually down a bit. One of the only revenue lines that's down. But you can appreciate that in the context of the current market environment, this is pretty creditable. I mean, what we had to do during the last couple of periods with financial markets really showing a lot of volatility is pivot, is adapt. I mean, the ingenuity of our team, the talent really shone through. And again, we were able to produce differential value in our view, really preserving value for our shareholders, creating value in areas of the portfolio. And the net performance, in our opinion, has been pretty good so far. The final revenue area that I'll highlight is net interest income, which really speaks to the interest income, the difference between the interest income we earn on the securities that we own and the interest that we pay out to our liability holders. And you can see year over year, that's up over 90%, again, reflecting a very core area for us, right? So our revenue picture, in our view, is pretty strong, poised to grow even further, and very sustainable. So moving to the profits that have been generated year to date, I mean, we've really delivered from this line a record performance year to date for the 9-month period. We delivered $2 billion in profits for the 3 quarters, and this $2 billion notably eclipses the full year profits that we would have generated for financial year 2019 of $1.7 billion. So again, I mean, a pretty strong performance in the face of a very difficult period. This really reflects a few items on our balance sheet and really just kind of sums up the growth that the business has experienced year over year. So total assets is now over $50 billion. Total shareholders' equity is now over $15 billion. Total investments now over $41 billion. And our repurchase agreement funding is over $30 billion, right? So I want to talk now briefly about the APO itself. I mean, what are we trying to accomplish with this APO? Well, what we're trying to accomplish is a raise of at least 9 billion Jamaican dollars in additional equity capital, right? And that will see us issuing new shares at prices between $49 and $52. And really, the different prices reflect prices that we're availing to different groups of prospective investors. We recognize that, this crisis has really done several things to include negatively affecting the investment capacity of individuals, right? So we have carved out a category for smaller investors, right, which really captures potential investors between $15,000 and $50,000, right? Recognizing that the scale on which people invest would have been impacted by this crisis. So we're really doing something for the smaller man, right? We've also carved out a category at $49.75 for a special group of persons who we think, again, have seriously been impacted by this crisis. Now, specifically, we're talking about civil servants, we're talking about nurses, doctors, hotel workers, people who are at the front line or people who largely would have lost their jobs or been temporarily laid off during this period. We recognize them, we salute them, the heroes who are at the front line fighting this crisis, and we're availing them a special price. And finally, price of 52 is being availed to the general public and to include our existing shareholders. So as I mentioned earlier, the APO opened on the 26th of August. We expect to close at the latest on the 16th of September. And at a very high level, our expectation is that this APO will give us further capacity to continue our transformational growth trajectory. Now, the specific lines along which we intend to deploy the funding are as follows. So, in our investment banking business, we see ourselves as a vertically integrated investment bank. And what that means is that we don't only raise money on behalf of people, but we also tend to participate in the deals that we do. So this area, we think, really needs some more capital to deal with the fairly large pipeline of opportunities that we have put together. Secondly, we are intending to become an omni-channel provider of financial services. So we're in the middle of a digital transformation, which really will require us to deploy capital to strengthen our technological architecture and move things along in that direction to become, a multi-channel provider of financial services. Sorry, just struggling with the technology here. The third point is really our intention to pursue some new investment strategies and products, which we intend to bring to market fairly quickly. And really, we need capital to, one, seed some of these investment strategies or to scale them up to the extent that they're already ongoing. And two, to really focus on, seeding some of these products so that we can make them market ready. And finally, we're intending to continue our expansion thrust, which will mean that we will be, one, popping up in other locations in Jamaica. Our GM at our last annual general meeting indicated our intention to open at least 2 new branches. And secondly, we are intending to move outside of Jamaica to try and avail our products and services to the markets external to Jamaica, higher growth markets, etc. And with that, I think I'm finished. So I'll now take any questions you guys might have. Thank you very much.
Thank you for that, Ramon. I'll just pass over to Julian.
Can you hear me?
Yeah, I'm hearing you now, Julian.
Yes. So I was just saying that Ramon had a very thorough presentation, and it was very, very comprehensive, and just want to thank you for that. So, Ramon, what would you say are the main points of differentiation from old Barita to Barita 2.0? Because many persons are familiar with the Barita brand, but what would you say has really changed materially versus now versus then?
Yeah, so Julian, I mean, there are a couple of things, right? Certainly, you know, our founder, Mrs. Humphreys Lewin, would have built up an excellent company, you know, a fantastic brand, an excellent culture. What we've really tried to do as the newer people involved in the business is really build on that, right? And what that has meant is new business lines. So, for example, our investment banking business line was launched in December 2018. And in the 18 months to June 2020, we would have generated about 520 million in revenues, direct revenues from that business line. So really the new Barita is about new business lines. We also have a wealth management division, which is squarely focused on addressing the needs of our high net worth and corporate clients. And that has been yielding some success. We've brought new products to the fore. So we have a structured notes business, for example, which, you know, provides tailored solutions to more sophisticated clients who really have specific investment needs. So the people have really brought in our view, you know, and diversity to the revenue profile of the entity. You know, certainly new Barita has been characterized by very sharp growth, which is evidenced by our financial performance. So we're on a growth track. I mean, we have new wind beneath our wings, so to speak, as Barita 2.0. And we're a more prominent company, meaning, you know, we're kind of more in your face. We're bringing the news to the people, so to speak, which is a little different than, I guess, the style that would have existed before. But still the same solid company that you would have known from 1977.
Okay, understood. So there's a school of thought that, all right, so getting a question, the money set aside for the APO is for investment banking / underwriting. What's the timeline for deployment? That's what Steph is asking. Stefan.
Good question. So I can speak very generally respecting timelines, right? So we do have an active pipeline of opportunities across all areas of the business to include investment banking, right? That being said, we do have opportunities that, you know, we can capitalize on immediately. And certainly this additional capital will bolster that capacity, right? So it will mean, I suppose, less rationing. We may be able to participate in a larger scale in different opportunities that we have in our pipeline. So in terms of deployment, you can expect that if you look at the previous capital raises that we've done, right? We did one for 4 billion in March of last year. We got $1 billion in about July, and we got another 5.2 in September. And if you look at the returns of the company post, you can see that we haven't quite dropped the ball, right? We've really been running at a pace. So in that context, you can appreciate that, you know, with this 9 billion coming in, we do have immediate plans to deploy to ensure that, you know, we don't cause a drag on shareholder value. All right.
Stefan has another question for you. Can Ramon explain Barita's Brain Trust project and how technology will aid in that build out?
All right. So Stefan, without spelling out everything to my competitors, in terms of our Brain Trust, it's really the name that we give to the talent that we have put together in the company. We really have, again, a comprehensive talent management program, right? And it doesn't only involve assembling a team of persons who are very good at what they do. It involves their development. It involves inspiring cohesion between the team. It involves, you know, giving them avenues to ventilate their ideas for innovation, etc. And we think that that's certainly going to allow us to continue to change the game into the future as an organization. Naturally, technology is at the center of most things today, right? Most services, most products. And, you know, it's no secret that financial services has become more integrated into technology. There's even a term now to describe that, fintech, right? So, you know, you can appreciate that, you know, an organization like ours, with the people that we have, and, you know, we're assembling, and, you know, the focus that we have on diversifying our channels with the use of technology, that both things will integrate together to hopefully, you know, come up with game-changing ideas.
We'll have one from Christoph Ellis. The prospectus states 153 million in transaction fees. What kind of transactions does that entail and which entities get paid?
Good questions. I mean, our transaction fees are not atypical for offers like this. I mean, you have legal fees, you have general transaction fees associated with brokerage, be it your selling agents, be it your lead broker, be it your underwriters, etc. So if you look at the transaction fees as a percentage of the overall raise, I mean, I suspect you can get something like 1.5% or so, 1.6%. Which is outside of the typical range. So it's really to do with everything surrounding the transaction, the marketing that accompanies it, and any other expenses directly related to it.
So Ramon, we have another one from Christoph. Barita has plans on branching out into other financial services. So he's asking which ones are these, if you can list them out.
All right, so I can't get specific, but certainly Barita is open to branching out into complementary services to what we do. I mean, again, you know, we see ourselves as full service. We really want to be able to give our customers a holistic experience, right? So I'll give you an example. I mean, when the company was acquired, we had very good investment solutions, but we didn't have many financing solutions. So us appending the investment banking business onto what would have existed before as a company has really allowed us to, again, give a 360 experience to our clients. So we don't only give our corporate clients investment solutions, we can also give them financing solutions. So to the question that you asked, yes, of course, we're looking at other complementary business lines to get into, to become more effective at what we do at our core. But I can't quite tell you which ones at this point in time.
Roman, I have a question, and I guess it's a question that quite a few people have asked. So, to the best of my knowledge, Barita's public transaction that will happen in September, well, it's open already, is one of the first that have been on the market, if not the first that has been on the market since COVID started. Why no? Why not wait?
Good question. All right, so it's a good question. I've gotten this question, you know, talking to people about this offer. It's really the convergence of two things, and it really highlights one particular characteristic about us. So it's the convergence of supply, one, meaning supply of, you know, compelling opportunities, we believe, on our side in terms of opportunities to deploy capital. I mean, the fact is that the crisis has come. It's been very unfortunate and difficult for many, for all of us. We've been affected in some way. But it's also, frankly, made, you know, some of the investment opportunities in our pipeline more compelling, to be honest. So that's one. So it's a convergence of supply of opportunities and excess demand that we would have detected for our stock. And the fact is, Simon, I mean, our track record speaks for itself post-acquisition. If you look at the return profile of the company in Jamaican dollars to June, so from August 28th, 2018 to June 30th, 2020, the company would have delivered a total return of 586% across dividends and capital gains to its shareholders. Right? And this is in the context of us trading right now at a multiple that's in the high teens. Right? So, you know, that is compelling, and that has drawn a lot of demand for our stock. I mean, to put it into perspective, and I can share something with you, how we would have performed over the first 2 years of, you know, our existence post acquisition. If you put it in US dollar terms, because I know a lot of investors love to benchmark performance in US dollars, and I can actually show you it on the screen. I think it's more compelling that way. Barita has delivered a return of over 500% just from capital gains alone in the first 2 years of our performance as a company, right? I mean, that has outpaced many different assets and asset classes over the period. If you look at the broad market, for example, I don't know, Simon, if I can be allowed to share my screen just to show you a table.
Yeah, man, you can. But I'm not seeing. Just sending the thing.
Hold on, let me just show you. A picture is worth 1,000 words, right?
1 second.
Tell me if you're seeing a table on your screen.
No, man, I'm not seeing anything in there, man. Oh, well, yeah. I'm seeing it now. We're seeing it now.
All right, so if you look at Barita's performance in US dollars, right, as at the 28th to the 28th, which is today, you'll see that we would have returned over 500%. So compare that to other asset classes, be it the JSE main market down here, which is up in US dollar terms, about 5%, S&P, which is up 21%, Google or Alphabet, Gold, which has been doing very well this year, Berkshire Hathaway, great Warren Buffett. If you look at that return over that period, it's pretty compelling. So, in that context, Simon, it's not a surprise to us that there is excess demand for the stock, which complements the supply of opportunities that we have. And finally, I'll say, I introduced the company and its constituents as being bold earlier, game changing. So, if it takes us to reopen the market while this crisis is still going on, that's what we are attempting to do. We're fairly confident that we will be able to achieve it.
Okay, so you answered one of my last 2 questions as it pertains to confidence, and you did express that you're fairly confident.
Well, you can strike the fairly from in front of the confident. I was being modest, but we're confident.
You are confident. All right. The other question I had was, and it's a good thing that you segued into material returns, because a lot of people over the past 3-4 years have been investing in new offers for material short-term return. Can investors expect this from Barita? Can they expect 500% more over a short 2-year period?
All right, so that's a good question. So I'm never one to prescribe what the market will give you, right? What I can talk about, however, are things that are somewhat in my control as an employee at the company. Naturally, Simon, we come into the market for capital to provide a return on said capital, right? Which means our expectation is that we are going to use this money optimally to enhance the value to our shareholders, be it one, the profits that are ultimately attributable to them, and 2, the dividends that we're able to pay them, right? The return that you'll get from a share price will naturally be more so a function of how the market decides to treat with the stocks that are listed on it. I can tell you my own outlook broadly is that, this fall off that we've seen in economic activity and by extension financial markets will be transitory. History has taught us that, every rise is followed by a fall, and thereafter every fall is typically followed by some level of recovery. I can't tell you exactly when we're going to recover, but what I can tell you is that we do believe we're very uniquely positioned to continue to deliver value to our shareholders through our business activity. So I spoke about the pipeline earlier. I spoke about, our resilience, which is evidenced by the performance of the company even during this difficult time. So, it's up to investors to determine whether in that context, we're a company that they want to ride with during this time and beyond. And
I guess that answer also answers Mikhail's question. So sorry guys, we have 2 more questions. Boy, Shadi is just sending a big one, but I have 2 more questions. So I have one from Steph. He's just asking if you're oversubscribed, And I think there's an upsizing option. I guess if you're over that, where would the extra funds go? Where do you usually put extra funds when you're oversubscribed?
Well, I mean, to the extent that we're oversubscribed, you're right, we do have an option to upsize to some degree. And to the extent that we do exercise that option, there are three lines in particular that would benefit from increased capital allocation: investment banking line, the line respecting our investment strategies, and the final line respecting our intended footprint expansion would also benefit
So,
from increased
what you're
allocations.
confirming, Raman, is that if you are oversubscribed over the upsize limit, you will more than likely keep those funds rather than issue them out. I don't really know how the back of it.
No, well, sorry. To be clear, I believe regulatory-wise, we are only allowed to accept a maximum
Okay.
of the amount prescribed
Okay.
to the upsize rather. So I think the maximum size of the offer can be 13.5 billion. So what I'm
Okay.
describing is a situation where we decide to take funds in excess of 9 billion, where it would go.
All right, Steph, I hope you understand that. So the maximum amount that Raman is allowed regulatory wise to accept is 13.5. If he gets over that, he must give you back your big bit of money. Last question goes to Shadi. Boy, Raman, everybody have a lot of questions, you know. Are there any regional expansion plans in the pipeline? I know they are looking into branches locally. So she says she know about locally, but what you can tell us about your regional plans?
Yes, I would have stated publicly that, and I think I just said it not too long ago, that as an organization, we're looking at further diversifying our revenue base. I mean, to drive resilience, to drive growth. So we're looking at higher growth markets. We're looking at markets with a very captive, addressable market, so meaning, who have people and companies that utilize the services that we provide, that we can provide them to. And we've already started to do business outside of Jamaica to the extent that we have funded companies external to Jamaica via our investment banking business. We've participated in deals external to Jamaica. So it's really for us to continue along that phased track and move into the region as an organization.
All right, Raman. I know I said that was the last question, but I got a question from Twitter. She's saying, how do you know who qualifies as a public sector worker?
Yeah. So we have set out various criteria, Simon, for public sector workers to include specified identification. So if you are a police officer, for example, you would present your ID, and that would be used on the basis of qualifying you as a police officer. So that's the criteria there.
Okay. I just want to thank you a lot, Raman, for the very informative session. I know we got a lot of questions, and I believe that we answered everything. You're always willing to come on and share with us, and I hope we continue to have this relationship.
Yeah, no problem, Simon. Thank you very much for having me. I appreciate it.
Yeah, man. Thank you, Raman.
All right.
All right. So next we'll be jumping into a short market review session. The initial part of the market review will be done by David. Horton Richards, FRM, is also here from Barita Investments as well. And he will also be doing a part. So really and truly, David and Horton will be doing this session. David, Horton, you're hearing us, and Julian will be moderating.
We can hear you.
Yeah. Afternoon,
All right.
everyone.
So David, we'll have you go first, and then we'll have Horton after.
Yeah, I can hear you. Don't worry. All right. So you want to cover the items on the board meeting, the share buyback, and the side of the full disclosure. So for the Ramon APO, so just to give a brief explanation, so Horton did a video with Barita earlier today, but I'll explain it again. So in the case of a public offer, we generally know two very distinctive ones in Jamaica: an IPO, which is when a company first comes to the market, and then you have an additional public offering, which is when an existing company decides to come back to raise additional capital. In the past, we've been used to the term rights issue, which was mainly exclusive to shareholders, which is what Barita executed on last year twice. But an APO gives the general public opportunities to actually invest into your company rather than being firstly reserved to shareholders. So you've had companies such as Proven, who didn't get to go through the APO, and other companies such as Sterling, Panjam, Derrimon, Halls, Cygnus, probably Capritans and Cygnus, who might be also having their own APOs coming up very soon to raise additional capital. So Derrimon is actually the first junior market company in this case actually put their intent out to the market that they want to raise additional capital. But here's the major caveat for Derrimon compared to a US dollar listed company or a main market company. For Derrimon, they are restricted by the junior market rules. So for those who don't remember, the junior market has certain restrictions which limit them to what they can do during the tenure of their 10-year tax break. So for a junior market company, they're not allowed to actually surpass $500 million in voting share capital. Currently, Derrimon basically is at $140 million. So if there are three additional capital, they'll be initially constrained to the $360 million. However, if they decide to raise more money, they'd breach that requirement, and depending on the level of how much more capital they actually raise, they would either have to after they have conversations with the JSE, potentially actually be allowed to stay on the junior market but pay fees as if they were a main market company, or be required to graduate to the main market. So that's the major distinction for Derrimon in this case. And the thing is, if they're graduated towards the main market, the company actually loses their remaining 3 years remaining their tax break. So they got listed in December 2013. They have another, call it 3 years and probably 4 or 5 months left with that 50% remission of income tax. So that's the major distinction for Derrimon in this case when they're coming to market. And a Barita who has no necessary restriction as to how much capital they can raise other than what is stipulated in a prospectus, there is it's a regulatory, but a rule-like requirement, which is going to be a hurdle for Derrimon, which will give them a concession, which will be discussed at the AGM. Will they choose to actually leave the junior market to raise additional capital beyond the $360 million, or will they raise the $360 million and remain in the junior market for the next 3 years for the 50% remission? No. Sorry, yeah, continue, Simon.
Sorry to cut you, David, but I had a question because, funny enough, as I said before, I haven't really been in the market for the past few weeks again. I have boats in and out, so I have to depend on people like you and Harton to really update me on what's happening. So basically, you're saying on the junior market, they have a share capital restriction. If
Yes.
they raise new equity, which is through an APO or maybe a rights issue as well,
Yes.
they will increase the amount of share capital past that amount. And if they violate that amount, they either get a certain waiver from the JC or they go on the main market. My understanding is that, well, if I wouldn't suspect that the JSC, when they started the junior stock exchange, would have even been thinking that, junior market companies would get to the point where they'd be doing an APO or any type of large share offering beyond that amount. So I understand what you're saying. So what did they discuss at the AGM? Is it something that they've applied for approval for?
No, so Derriman actually gave us the heads up, or basically the notice a week ahead of the actual board meeting, which is set for Monday, to consider the APO to be put to shareholders at their actual annual general meeting. However, Derriman still hasn't released the annual report as yet, or given the date for their potential AGM. But what I do understand, So Dairyman has a lot of debt coming within the next 2 years. So they have option of either refinancing or as I highlighted, raising capital, paying off some of that debt, and using the rest for working capital purposes. So Dairyman is a very unique company in the fact that they have gone back to the they've gone to the market twice in the form of raising preference share capital, preference share equity capital, which is in the form of liability for them to actually expand operations. In the first time when they did it in 2015, and in 2018 they did it to refinance their original preference share debt and for working capital purposes. And the thing about the preference share issue is that it actually didn't count as share capital under the equity area. It counts as a liability.
Yeah, because it would be a debt-like instrument. Trevon is asking, hold on, let me put up his question for you, David. Trevon is wondering what's the determinant in deciding whether the JSC um keeps them or they have to graduate to the main market.
Well, one thing I could basically talk about from my basic understanding is it would really first thing I would come down to the point is how much have they actually surpassed the amount? That would be the first question. So if it's
Mm.
probably like $1 million or $2 million, it probably might not be so bad. But you were talking about like they raised up to $500 million and they are $640 million in share cap now. It really and truly depends on the respective committee of the JSC to determine what criteria they actually use, because there's never been a case where a company has decided to actually raise capital and potentially breach that amount. Because the thing is, Key themselves moved to the main market and GK has single intentions to raise additional capital to potentially arise issue. But the funny thing about it is,
Sorry to cut you again, but as the questions come, I just want I want to ask you. I don't want you go off too much on
I
one.
understand.
Yeah, but Sade asked something important. She said, so it's enjoying the tax break versus surpassing the capital maximum. How much years is detail on the market now? I'm not sure if you know offhand.
I said December 20, 2013 was when they originally listed. Sorry, December 17, 2013 when they
Oh,
listed.
yeah,
December
sure.
16, 2023 is when they basically the tax break is up.
Okay, so they have a little more than 3 years. So I guess they have to weigh that. But David, because we're short on time, I want to go through some other stuff as well.
I understand.
And this is something we have economists Wendell Ivy online and Julian and Hartney can chip in as well. I saw something about Salada, where JACRA, which is the Jamaica Agricultural Commodities Regulatory Authority, was basically saying you guys need to use more local coffee in your coffee products. Is this something that that you think is fair to Salada?
In a true market economy, it's not fair for them considering that they're the only ones who are going to take the biggest hit as the only basic local roasting company. Because Salad has basically pointed out that there's a significant difference in quality and cost, which is not fair for them because it's going to drag them into an operating loss based on the significant variation that they have to actually face between actually changing the profile of their coffee and on top of that paying extra costs to actually purchase the coffee. So it's not fair for Salada. 30% actually, Jariza.
There is pointed out that they currently use 10 and they want to move the regulation to 30. So I guess it's the difference
Oh,
that they want to use. Ivy, and Julian, from your perspective, do you think that this is something, this is a fair recommendation from Jakra for Salada, a private company?
Well, I don't think it is actually fair to the company. Don't think it is fair.
And that's on the same market economy premise.
Yeah.
Um, I've been looking at Salada for some time now, and I think the situation is actually unfortunate because before the regulatory pressures, and they had some issues before with one of their boilers. But historically, they've been doing very well. They maintain a very low level of leverage, and they have a strong business model. However, the regulatory pressures, or should I say, the pressures from the lobby group, has really created some significant stress on the business. We're seeing where their operating expenses and their cost of goods sold, the cost of inventory has gone up quite a bit. So it has squeezed them. So it would be very sad to see a good business be brought to its knees because of something like this.
And you
And
know,
to kind of,
sorry, continue.
oh, I was gonna just saying to kind of complement what Julian is saying, what it also does from a doing business perspective in Jamaica, it may actually set out what you consider to be a bad tone. You know, certain private investors may look at this as saying, you know, the level of intervention in our government entity, you know, in our private companies' operations, you know, may actually set a bad precedent for potential foreign direct investors within the Jamaican space. So it's a very tricky line to be kind of towing, even though, you know, the underlying goal of JACRA with this is to really promote the local coffee industry. It does kind of set up potential bad precedent for private entities and government regulations as well from a international investor perspective.
You know, and well, I guess my perspective is similar to what you guys stated, so I don't want to repeat it. But I guess what the other side is saying is, are the persons that may support this from Jakra is saying is that, look, you may or may not be advertising that you use local coffee and you use X amount. We believe for you to be fair to that statement, you should be using at least 30% to that amount. So people should say in Salada should be buying Jamaican, right? Remember, we have a whole campaign where you should be buying Jamaican. But I guess from the market perspective, you guys are saying, look, if I can buy foreign, which is cheaper, incorporate it into my product, make a profit and expand my business locally and produce a cheaper good for the local and international market, so I'm more competitive, then everybody benefits overall.
Yes,
So
Simon, because the truth is, if Salada is brought to its knees and it comes under severe stress in the future, it means that it might not even be able to buy larger quantities of Jamaican coffee, which is counter to what Jackra is trying to achieve. So the idea is that they want to have the right mix of local and foreign coffee to have the taste profile that they need. Because from what I understand, they do have a mix of local and foreign coffee in terms of the beans and stuff, but it has to have a certain mix. And when they change the mix, it really offsets a lot of things.
Christoph is asking if Jamaican coffee, and I guess being Jamaican Blue Mountain coffee is really that expensive.
Well,
I
all right.
can I can
Go
put the
ahead,
data in.
David.
So the Salada sent article that they pay about $2 per kilo, and I don't quote me on the weight, but they pay about $2 US per whatever quantity for the coffee. With Blue Mountain Coffee, that pay about $8 US per that same amount.
So pardon my maths, but I will eat more.
It's 4 times more.
Yeah, I will eat more. So basically, raw material and guys, remember we have to tie this back in because this is stocks and rocks, and this is from a financial literacy perspective. What this regulatory authority is saying is that, look, we want to buy more of this Jamaican product. Salada is saying that Jamaican product is 4 times as expensive as the other products that we have that we buy from abroad. If we buy that product, then our costs are going to increase. And if our costs increase, right, then our profit margin is going to go down. And what do private businesses maximize the most? They want to maximize them profit. So you know how else them are going to maximize them profit? Them are going to cut expenses. But yeah, this is, and it doesn't seem like, and as I said, I'm not too tuned on this, but it doesn't seem like Salada, if Jakra, who's apparently the regulator here, it doesn't seem like Salada has a choice if Jakra and the government and MICAF, which is the ministry in charge of industry and commerce, says, yeah, you have to do this.
It's unfortunate, Simon.
Yeah, so I guess the last thing on this slide is as it pertains to Caribbean flavors and fragrances. So it has long been, you know what, let me stop talking. David, what go on with Caribbean flavors and fragrances? And why them
So,
was at this moment?
well, if you know, for those who don't know, Caribbean Flavors and Fragrance is actually a subsidiary of Derriman Trading. So Derriman got the controlling stake back in 2018, and Derriman actually split their stock back in 2018. And Derriman stock was relatively liquid as well, similarly to how CFF is currently right now. So
What do you mean by liquid, David?
So when you talk about liquid stock, people, we're talking about the ease and the frequency in relation to ability to trade the stock. So for the case of CFF, it hardly trades many days, and what ends up happening is that CFF stock price rarely moves, and if volumes do trade for the stock, it's very minuscule. So as a result, CFF stock price basically becomes relatively stagnant. So if you're the investor buy the actual stock, it might be difficult for you to actually exit the stock. So imagine you buy a stock for $10 and it's worth $14 now, and you want to potentially sell the stock to realize the gains. But in reality, the only opportunity to actually sell it is probably at $11. And that's what happened for CFF for the last couple of years, where due to the large concentration by such a small number of shareholders, you basically had this illiquidity of the stock where the price has become stagnant and you've had little to no trading for CFF. So I did some maths earlier this week, and outside of the top 10 alone for CFF, control 91.28%, sorry, 91.28% of the stock. So just 8.72% is basically trading on the markets for everybody else. And the things that's only the top 10, that doesn't actually include the senior managers or directors. So for CFF, actually, quote unquote, be pushing a stock split now, it's good in the sense to actually get the stock liquid again and to expand the shareholder base. Because a liquid stock also carries the construction of a smaller shareholder base. And as a result, you basically have 80 persons actually projecting your AGMs or potentially having a smaller input in the future if you want to raise extra capital from equity.
Get you. But David, well, Julian or Horton, I realized that when the split was announced, the price shot up. So if you see the graph on the lower right hand side, the price shot up, right? To I believe the price was somewhere close to 18, like 17 something. But Hannah and Julian, this isn't something that is unusual. I remember almost every stock split that I remember in my little short time. On announcement, the price has moved well because people expect some form of trading. Is that so?
That's correct. That's usually the case. It's categorized under behavioral finance, where because now the shares in this company will become more liquid relatively. You'd want to have a certain amount of shares before the split actually takes place, so as to increase your portion of holding within that particular company. Hence, there's usually a rush on demand for that particular stock. But it should be noted that even after, or so prior to and before, so prior to and after stock is actually split, the value of the shares also moves along the same line, meaning while the number of shares you'll own will also increase, the price of those shares will also decrease. So the market capitalization of the company does not actually change. So that's something that's very important.
Because
Yes.
really and truly, the only thing the stock split changes is the amount of shares that is out there.
Right, but not the market capitalization.
So sorry, what do you mean by market capitalization, Hutton?
That's a good question. So the market capitalization is really a function of two things, which is predominantly the stock share price and the number of shares outstanding. So you would multiply the share price of a stock by the actual shares outstanding. Now, in the case of a stock split, when the number of shares outstanding increases, the share price goes down by the equivalent amount. So in case of a 10-for-1 split, for example, the shares outstanding will increase by 10, but the particular share on the share price on the day of the split will also decrease by 10. Thus, the market capitalization, which is a function of these two parameters, will not necessarily change or wouldn't change at all. It would be equal to the same on a pre and post split basis.
So yes, is that the market value of the company now go change early.
Correct.
All right. So don't move on. I had another so just moving on to the next slide. We wanted to discuss a bit more. So I mean, if you guys could just comment on these things briefly. So I have Hartney here, but just as a while ago, David and Julian, you can chip in as well. Equity Line. I don't see the name of this company mentioned almost ever. Equity Line financials came out. Anybody looked at that?
I actually did take a look at it. I did, and it is interesting. It is interesting that it's a company that's not really spoken about. Sagicor would have brought them to the market, I believe, last year, and they issued a preference share, Class B preference share. So generally, the preference.
Are they listed? Are there ordinary shares listed, or is it preference shares?
So they have preference shares that are listed on our stock exchange, Class B preference.
Okay.
Right.
And so because we bring up that on, sorry, but because of the type of program we have, we try to break down everything in a as short a way as possible. So just like the debates, if you can tell me in 45 seconds, what is the real difference between preference shares and the normal stocks or ordinary shares that we know about?
All right, that's a very good question, and thank you for allowing me the chance to explain it fully. So what a preference share is within a company is when you look at the capital structure for a company, you're predominantly raise capital in two ways, whether it be in debt, which most people are familiar with, a bond, or you can raise it through equity, which most people are familiar with ordinary shares. But in between those two, or a combination of those two, you can have what you call preference shares, where a preference share can either be debt or it can be equity based on how it exactly filter into the actual capital structure. So when a preference share, for example, pays a fixed amount, on a timely basis, or on a regular basis, that would consider to be more of a debt-based type preference share versus a preference share which is redeemable and actually has a conversion. Conversion meaning that you'll be able to get equity from your stake in this preference share. Then that preference share will be considered to be more of an equity preference share. So it really is a hybrid of the two ways of raising capital, hence what the preference share really is. In the case of Equity Line, it will come in more of a debt type preference share, given that it pays a fixed amount on a quarterly basis, I believe.
All right. Well, I want to ask you. Sorry, you were continuing on Equity Line. My apologies.
Oh no! Well, I was just really saying that Equity Line, for those who are unfamiliar with this unpopular stock, as you rightfully said, Equity Line, what they really did is that raise capital on our stock market. They raise capital on our stock market to actually purchase a portfolio of mortgages that they issued to what consider to be the non-traditional lenders, or your prime or alternative A, which is just a level of credit risk or mortgage risk by individual. So when they raised the capital, they created a portfolio of mortgages to which now they earn rental income from. And that is essentially how they fund their operations. So they loan money to these individuals and then they earn back off these mortgage payments. And that is essentially the breakdown of what they do. Operate in the greater Toronto area predominantly, and mainly on residential properties. So that is a unique business model to which Equity Line operates in. It's not new unique to our stock exchange, because we have familiar companies, First Rock, Capri, that do something similar along the lines. But Equity Line in the purpose that my international organization that then operates in our Jamaica Stock Exchange speaks very well to the level of confidence that international individuals would have had in the ability to raise capital on our local stock market and then be able to, function as a highly recognized stock exchange.
All right. I have some more stuff as it pertains to broilers, stewards, and blue power and everything fresh. But what I really want you, Julian, and David to comment on, the BOJ governor a day or two ago stated that the new range for contraction for the economy for 2020 is, let me say again, 7 to 10%, something
Correct.
like that. Yeah. So the economy is likely to contract by about 10%. I've seen others come out and say, look, it might even contract by more than 10%. This would have been the largest contraction that Jamaica has seen in years. Remembering where we're coming from the 90s, I don't want to say decades, but in years. Now, how do you guys foresee the market going forward? And I don't want to make it too difficult and say, oh, where the market are going to be in 3 or 5 years. How do you foresee the market being next year, given that the governor has said that he doesn't expect any return to normalcy from an economic perspective before 2022, 2023, which is about 3 years from now?
That's a very good question. I think it's a lot to digest and to dissect. But what I want to first start is to make the distinction that the financial markets and the economic, we call Wall Street and Main Street, for example, they operate together but differently, to the extent that one is a forward indicator, which is the financial market space, while the economic data tend to be a lagging information. So in the context of that, if you look at the overseas market, for example, you'll notice that the equities market measured by the S&P 500 has done a significant rebound from the March bottoming that you would have observed in March 23rd, I believe was the lows. And many would have wondered, why is it that the financial market are doing that much better than the economy itself? But really and truly, you have to view the financial markets as a leading indicator, meaning that persons would purchase an individual stock or security based on their outlook for that security, incorporate all the economic data and all the financial or fiscal and monetary support they would be getting. In the case of Jamaica, our estimate is that the BOJ recently gave that a contraction will happen between ranges of 7 to 10%. But I believe everybody can appreciate that Jamaica's economy today is much different from the economy it was a decade ago. Even earlier than the 1970s, we have successfully completed a IMF program that built a large buffer within our fiscal framework. We had primary surpluses of about 7%, I believe, and we're able to lower it as low as 5.2 to essentially free up additional capacity in our budgetary support. I mean, you take into consideration that our fiscal framework is now in place. I mean, Jamaica today is much different from Jamaica in the past, and I feel that that alone would allow for the level of confidence a person may have in Jamaica's resilience in a time like this, especially in the context where the COVID-19 pandemic is one that is still uncertain in terms of when it will actually end. It's still an ongoing situation and development, but the resilience of Jamaica's economy and the strength of it relative to its previous state, I think, bodes well to financial market activity. And such is why you'd see a lot of posturing now in our capital markets for a lot of APOs. I mean, Derrimon is now, as David mentioned, Derrimon is speaking about the APO. Cygnus is positioning themselves for an APO. Panjam has also indicated that they're potentially seeking an APO. Those level of capital market activities would not have happened if individuals were not confident in the macroeconomic framework that they're operating in. And again, that alone speaks well to kind of indicate to you that, while the markets today, would have reacted negatively, I mean, you want to be able to go on a looking forward basis, and that should really what be driving individuals' perception about the market. I mean, COVID is here today, but we don't believe will be here tomorrow or years to come. So you want to position yourself in these low depreciated asset prices now for when the time does come that there's a recovery in the financial market space.
All right, boy, long-winded, but basically what you're saying is, look, the market is strong. There's a lot of confidence in the market. So you spoke a lot about the confidence in the market, and confidence will drive the market. You separated the financial market from what we were talking about before. I mean, I understand that, but you know, my perspective is I guess similar in a way. So I won't even say anything, you know, but certainly over the next year, you do expect some market tightening, not necessarily in the financial market, where definitely the government will be pumping more money in the market, whether it be through social intervention, capital market activities, or from the central bank side as it pertains to enhancing market liquidity or the amount of Jamaican dollars in the market. But certainly there will be some contraction going forward. Julian, David, you each have 45 seconds.
Okay, so I have a slightly different view from Horton. So I think everything Horton has said is valid. But what I was saying now is that essentially a lot of the impacts from the COVID-19 disruption has not fully materialized, in that we haven't started to feel the grip of the disruption to tourism and by extension the linkages within the economy just yet. Because to use a medical metaphor, you know, the wounds are fresh, right? Not enough time has passed for us to start to get a full grasp of what has happened. So I think in 2021 we start to feel more of the pinch. So I do think the market is going to have some resilience because of our fiscal indicators, which have improved significantly. I do believe that our fundamentals are much better. However, I just think that it's good for us to extend our time horizon. So the investors who are not only confident, but those who are marathon runners should be able to maximize their value to a greater extent. Because as Governor Bias indicated, he's saying that he doesn't expect things to normalize till 2023, right, to pre-COVID levels. And before, we didn't really have a clear timeline to work with. Just off the top of my mind, you know, being a rookie to this whole thing compared to Governor Bias, I was thinking 2023 as well. So a 3-year period is essentially prepping investors to gauge their expectations. So it's confidence with respect to being more of a marathon runner versus being a sprinter within this context.
Okay. I know I never kick you off a while ago, you know, Julian, because you go over the 45 seconds. But I
Oh,
just try
sorry, my boss.
just try to be trouble, you know. But Steph have a question. David, instead of commenting, I want you to answer Steph's question. I don't know if I'm putting you on the spot. He's asking how viable is the COVID equity fund in the JLP manifesto, and what's the impact on the market that you would forecast? I know this is something that Julian and Harton would have probably looked at. So if you haven't looked at it, David, you can pass it on to Julian or Harton.
Well, I've seen the basic information in relation to the $20 billion action and $5 billion being directly invested into certain companies. So I've seen that part. And the viability of the fund will really and truly come from what capital the government is able to actually deploy between public and private partnerships, along with what surplus or funds they have that they can redirect towards this fund. And the impact on the market will really and truly depend on how will it actually affect the different companies, either being recipients of direct investments or getting some recovery through their contracted customers in one way or another. So one reason I'm saying is in the case where you have probably, say, CPJ that supplies several goods to different persons or businesses. The businesses are struggling and the government is able to intervene and help with their recovery, basically. Then CPJ would have as I would say, a better advantage in terms of gauging how they're able to collect receivables and manage credit with some of their clients. Because right now, what's happening with some companies is that companies have become more tight on credit structures. I'm talking about credit, we're not talking necessarily about debt, but I'm talking about receivables. So say I have a service and you're a customer. You can only afford to pay me $50 or $100 right now. I will give you the service and I will take $50 right now. I will have something on my balance sheet called a receivable, which is the other $50 that you're going to pay me in the future. Because of COVID, some of the receivables that companies had from their clients have gone bad. So as a result, some companies have become more strict on offering credit to customers, which in turn restrain cash for some businesses. So if some companies are able to get, as you would say, intervention, support their recovery, and they're able to start scaling back up quickly, then they're able to actually use, or as they would say, consume or take on more expenditures or plans with some other companies that actually will be recovering in the interim.
Julia, any other comment? Harton?
I'm here. So just to kind of support what David was saying, essentially, I see where Christopher was asking to know what is a rundown of it. Essentially, what the government is trying to do, or what they're planning to do, if they are the next administration, is that they want to be able to provide direct financing, with the aid of the private sector to certain organizations they believe will be key in, or play a key part in our economy. Now, that's essentially similar to what the International Federal Reserve is doing by pumping money both into the market as well as into organization by offering lending facilities as such to help these organizations kind of weather the storm. So my assessment of it is a very positive initiative. The biggest concern for me, ideally, would be how exactly will this be funded. We can always say that, yeah, I'll support this economy, this company, or this initiative, but how exactly will it be funded? And that to me is really where I stay in terms of being able to understand it directly. You really want to be able to add support to the financial markets, because a lot of our pension funds are invested in our local equity market. So you do not necessarily want to see a depreciation in value or erosion of the level of growth in the companies that are listed on our stock market, for example. So that is really why it's important that a level of stability is applied to our financial markets, and adequate support is applied to the entities listed on our stock market and outside of our stock market as well. Our overall economy needs that level of support to kind of ensure that we're able to generate a level of productivity that we would have been doing on a pre-COVID basis, even if it's at a lower level. Want to ensure that productivity keeps going on a year-over-year basis, essentially.
All right, Harton. So Ivy, are you still online?
Yeah, I'm here.
All right, so I just want to thank Harton and David for passing through and giving your overview of the market. We really appreciate it, but we want to move on to the next section. Ivy, could you just give us a rundown of these numbers on the screen?
Okay, so it is basically a snapshot of the Jamaican economy, where this is what is the projected growth for Q1 2020.
Oh, that's the actual growth that was released.
Oh, because so the actual growth 2.3%.
Contraction, that is, because it in red.
Yeah. Negative growth. So, and then the point inflation is 5.7%. Net international reserves, US 2.76 billion. Poverty rate as at 2017, because we can't locate the 2018 ESSJ, the survey of living conditions, poverty data. So the latest data available here is the 2017, 19.3%. The unemployment rate is at 7.3%, and the debt to GDP ratio is actually 91.5%.
Okay. Yeah, so we understand. So this is basically some of the stuff that we're going to talk about now. So we just wanted to give a snapshot. But there was a last question from Steph. Steph had asked, is there any data on large institutional investors year over year? When was Julian? Well, I don't know. Julian,
Right.
how large is the pension fund? The amount of money that they manage now is about 700 billion, right?
Yes, I believe it could be a bit more, but
Yes.
in that
So,
neighborhood.
yes, so Steph, the pension funds manage about 6 to 700 billion. I could get the exact figure now, but we're just trying to go into uh, the next section. All right. So I'll try to get that for you before the session ends, Steph. And just briefly, I just wanted to point out the COVID numbers. I'm sure we're all very aware of it. I saw something before we came on, an article apparently that the CMO said that, we've really shifted to another paradigm as it pertains to COVID. If you guys would look on this, St. Catherine and Kingston and St. Andrew alone have about well over 1,000 cases.
13, yeah, around 1,300.
Yeah, they have most of the cases and St. James. And, funny enough, how we started off, well, it's not funny at all, but ironically, how we started off, St. Thomas only had about one or two. And St. Thomas was telling people that, hey, you need to just don't come over here. So, and because of some, some unfortunate events by people that were sick and probably knew that they were sick, and I heard that a church service was involved. That jumped up to about 193, and of course, Clarendon is also suffering as well. So, well, we just want to keep everybody that's suffering from this in our prayers, and just hope that this thing passes over. But I think something very important that I've come to understand and appreciate even more and more is that COVID-19 is not going away for now. We have to learn to live with it and live around it, right? And we just have to go change the way that we do things. We have to, in many ways. If you realize the cases now per day on average is higher than our highest point before, the active cases is almost twice the amount when all of us were in panic in April and May, and it's almost twice that now. So we just need to be careful. And of course, everything that we say is going to be, unfortunately, within the context of COVID, right? So just to move on to the next section. So I trust that everybody watched the debates.
Yes.
Um, and I
Most
mean,
of Jamaica was tuned in.
well, I think all of Jamaica was tuned in, to be honest. Kirk, you're hearing us?
Yeah, man, my dad.
All right, cool. So guys, I tried to rope in Kirk. Kirk is a busy man. When you see Kirk, economists like
Serious business.
and Ivy, they're online one time. Say some econ go talk, and the man here and Julian too. Julian don't profess to be an economist, but Julian is very well versed as well. So when you see them on here online, you know that we're going to get a plethora of knowledge. And I will just always come from the perspective of asking questions on behalf of you, and I'll share what I have to share. So what I did, guys, was kind of break it down into segments, and the segments are really based on so the first segment is on the first three questions, then the next four or five, and then things like that. So we have about four segments. So what we want to go through is some of the things that were discussed, and we can fact check as we go along as well, right?
Yeah, man, Simon, we with
Yeah,
you.
man, yeah.
So
Yeah, man.
the opening statement, I personally think so. My initial thing going into this debate was that boy, I've seen Nigel Clark, Dr. Nigel Clark, in his element as it pertains to talking economics and finance on every level, from policymakers to parliament. I've also seen him in parliament and know that he has the ability to be a politician, right? So I know that he could go between both. I was really concerned about Mark Golding going in, and he did start out a bit nervous,
Yeah.
but I think he really picked up along. So just to start it off, and I have notes here. They spoke about the PMP manifesto promises and the
Yeah.
JLP manifesto promises. Let's start with the PMP one because that's where the argument that's where it started first, and then we can go to the JLP one. So
So
yes, Ivy.
yeah, man. So basically, for me, the PMP manifesto, when I look at some of the things that they were actually saying or promises that they are actually making, for me, I think those are what I would call election winning strategies. Why I say that? Traditionally or historically, both parties would try to use some form of election winning strategies or some plan to ensure that they capture a number of votes so that they can actually win the election, even if those plans are not feasible. Because at the end of the day, when you look at it, you have so many poor people in Jamaica. And what I've seen in the PNP manifesto, when they come out and basically tell a poor man, say, hey, I'm going to pay your light bill. Yes, many of us might think sensically or think about issue deeper. But many people are not actually doing that. They are thinking about the money that is going to be put in their pockets or their bills that are going to be paid. So I think that it was really an election winning strategy, even if wasn't feasible. I'm not saying that that would actually allow them to win the election. I'm just summing it up as that.
Okay, I understand.
I agree with Ivy now.
I think
Yeah,
I think yeah,
because
Kirk.
what I was saying, because when I heard the second part, which was I think is the wealthy plan, or the wealth plan as they called it, the first thing that came to mind is this is not feasible and it's not well thought out, because say a person's light bill is $40,000, how is $3,000 going to help them? So there must be some demographic clause that's in it. And then there was a lot of back and forth as to, is it every Jamaican? Is it every Jamaican with a JPS account? So if you have a legal connection, will you get the $3,000 in your bank account? Or so that I think it was a plan that's rushed, and it sounded good to those who made the plan, but I think it was lacking in terms of how it will actually be implemented, and what's the net benefit.
I think both parties were probably pleasantly or unpleasantly surprised by the pushback that they got on plans that were clearly unrealistic and weren't thought out. So, since we're talking about the PMP manifesto, I think Mr. Crawford himself proved how unprepared they were by the plan changing a couple times. So, when you publish a manifesto document, the assumption is that this is what people are going to read and comment on. Any clarification or detail that you want to do, especially on high level for the important things, you put it there. They said that they would provide, they would pay for water and light or electricity for all. So when they say all now, the first thing came to my mind was that, but wait, people like Ivy and Lisa Hanna and Yendi, etc., etc., you don't need to pay for them light bill. So if they had come and said we would pay the electricity and water bill for all park beneficiaries, then I would have said, oh, okay, I get where you're going here. I get where you're going here. But they said all, and then they clarified the numbers at least two times after that part of the manifesto was published. So I think, yeah, I think the as Dr. King rightfully said, elections in Jamaica have been traditionally won on promoting fiscal, or people when we say fiscal, we're talking about how the government spend money, irresponsibility, and people like us that are not just on social media but all over rightfully started to ask questions. How? Where is it going to come from?
You
You
know,
know?
Simon, I don't want to veer from the core topic too much, but I just want to highlight a key aspect that would tie everything together. This is the importance of actually having an electorate that is built up of critical thinkers. Because in order to improve political maturity, we would have to think critically about these promises and hold these individuals who are putting these plans forward to a higher standard, right? And the fact of the matter is, we are carrying the baton. We're in the minority. Most persons don't think like us, or they don't have the access to information that we have. Most persons don't have a tertiary education, and actually, most people in Jamaica don't even have the internet, so they can't even Google and look up policies from before and put forward certain questions. So, we have a huge responsibility, and it's very important for us to continue to scrutinize and look at these things for these very reasons.
I just want to share some numbers that Mr. Golin shared. So he said the plan was costed carefully, and out of the $800 billion discretionary budget, his expectation was that this would cost around $70 billion, but this would not include the $22 billion universal health insurance plan. So really and truly, his plan would be costed at about $48 billion annually until that comes onto stream. And Dr. Nigel Clark had said that his plan would cost around, I believe he said 20, 30 billion. So 25 billion on capex and 5 billion recurring. But do you guys think that they answered the questions about where the money would come from sufficiently?
Yes and no. Yes and no.
What do you mean?
Goaling saying that it would come out of the consolidated fund. I understand that. However, he did not. For me, he did not articulate how it's like. What is he going to move around? What is he going to shift around? Because this would be. I don't remember how much percent of the budget this would what they want to implement would be. And if you take about if you try and source it out of the consolidated fund, then a lot of things would probably have to get pushed to the side or pushed back, which I am not sure how well that would go over, seeing as some of the stuff would be really needed now in a time like this. Originally, I thought that they would. Well, I didn't think either party would mention the fact they would be looking at raising debt, but separate and apart from what was said at the debates, I think that either party which gets elected will actually look at raising debt either by reopening one of the existing bonds, or probably by floating a new bond, because the level of government revenue currently, last time I checked, is down by over 22% when compared to the average monthly government revenue from last year. So if it is
Yeah.
that he's going to try and source it out of the consolidated fund, and then our revenue is down by 22%, a lot of shifting would have to happen.
Yeah, 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 man, Kirk. You're right. And what do you think about Dr. Clark? So you're right. As it pertains to what Mr. Bolin said, he said, "Oh, it's gonna come out of the consolidated fund, and we're gonna shift around spending, right?" But to be fair, guys, that's not enough. Anybody can say that. oh, we are going to, and I realized his words when he said it. He says, we have no intention to levy taxes. I'm no lawyer, but I better you say, me nah go levy taxes. Than
The key
Hey,
word is intent.
but
Simon,
you know, he's the
Simon.
lawyer, you know, not me.
But as you said that, Simon, I remember when we did see an article come out where him say we won't levy any taxes to implement the wealthy plan. But I was telling somebody, say, yo, look at that wording carefully. No taxes will be implemented for the plan itself, but if them shift around things and use that money for the plan, then things there will be a shortfall for finance other things. So probably them gonna raise the taxes for those other
Yeah,
things.
yeah,
And
correct. I agree. I was saying that one of the main reasons why neither ministers could basically pinpoint where exactly that money is going to come from is because they know that, especially with the wealthy plan, they know that some taxes will have to be raised, but they can't say that before September 3rd.
That's right. That's the elephant in the room.
They can't say it before. So after September 3rd and the government is formed now, then a bit of very soon.
them can say, boy, you know, we never really know exactly what happened. You know, I'm telling her, they can't remember exactly what it was about, but all the child promised something a couple years ago in the election. And when they came into power, the man said, boy, I never know, so that account never having no money, you know, and etc. And we have to go shift around. But the point I guess we're all making is that we have to demand more from the politicians than just saying we're going to shift around something. What are you going to shift around? What will be defunded? Especially since our health sector, which seems to be at capacity now, needs a lot more money.
All right, gentlemen, I'm going
But in
to.
the about Dr. Clark, you know, realize, you know, what because it's unpopular. Dr. Clark did not answer the question either. I'm gonna make sure I list clip again. Dr. Clark said, and I quote, him say, we are going to use 25, sorry, it's not a direct quote, but 25 billion of capex that is not programmed. So that's $25 billion additional and $5 billion from recurring, which is a recurring expense. So he brought down the expense classification from the manifesto. He didn't necessarily say where it will be funded from. But I was saying on Twitter that Dr. Clark, after cutting taxes for well, the JLP government in general, they cut taxes for the last, what, 2 or 3 years. I think they have a stronger track record in finding money without materially affecting our fiscal situation. But that's my perspective. But Dr. Clark did not answer the question either. Steph has a question, Julian. I wonder if I can take this. Was there anything in the manifesto or said publicly about the rise in health costs and how funds will be allocated for this? And what impact would that have on other sectors?
I honestly don't remember that being directly addressed. I won't say that it wasn't said, but I honestly don't remember that being addressed directly. However, in terms of yes. So Steph is also speaking about the IMF line of credit and the usage. So let me pull everything together. Essentially, within our current macroeconomic backdrop, we've been dealt a significant hit. And we have to put that hit into context. So there are many hits we have taken in the past, hits from hurricanes, hits from different stress points. However, we're facing a situation that could cause consumption to be subdued relative to where it was in 2019, for example, for an extended period of time, especially because of the fallout of the tourism sector. And not only the tourism sector in and of itself, but other key linkage sectors such as entertainment and beverages, because we actually earn a lot from beverages, alcoholic beverages specifically. So what we're saying is because we've been hit from one stress point that has so many other major domino effects, it means that it's a very high probability that it will have to be a combination of measures. it might have to be a combination of new taxes plus new bonds being issued, or maybe even help being sought from a multilateral, right? Getting lines of credit from different areas. So it would have to be borrowings, but borrowings with a different mix than before. So you'd get some from an IMF, just for argument's sake, because we already did the rapid financing instrument. So that's what I mean. You take some from the IMF, you take some from another multilateral agency, you take some from the capital market, and you raise taxes as well. So it might have to be a culmination of measures that might cause us to tighten our belt for a period of time. But the fact is, Jamaica has just started to breathe a sigh of relief. So imagine having a patient that has just started to recover from a disease, and you tell the patient that, boy, just let you out of the hospital, but I have to take you back in the hospital to get treatment again. That's not exciting news. And historically speaking, Simon, the last time a finance minister mentioned bitter medicine, they lost the election. So I think that is why people are very cautious about addressing the elephant in the room. So that's my take on it.
There was something else I wanted to fact check. And I just dropping in some fact checking. We're not fact checking everything. But Dr. Clark in this segment stated that the PMP levied $53 billion worth of taxes in their last administration, which would have been from 2011 to 16. Um, and that is in fact true. So the calculation, my apologies, I didn't get to put up this graph that I have. They leveraged $52.49 billion worth of taxes over that period. And naturally, the last two budgets for the JLP have been cutting taxes. So naturally, the JLP would have levied less taxes than the PMP over that period. Sherry's asking, do you know how much COVID has cost us thus far? I believe I heard Dr. King mention that it has cost something about $80 billion in economic costs, which is revenues lost and costs that have been expensed. Dr. Clark had mentioned a few months ago that COVID would have cost in total around $120 billion for 2020. But I believe that was said long before there was a second, much larger wave.
Yeah.
Right? So that 120 billion is likely to be increased. We have buffers, but as I've said before, I don't think if the JLP wins or maybe the PMP, they're going to levy taxes. They may have to, but if they don't levy taxes, as Kirk said, then it's that time.
Yeah.
Or a mix,
they should
maybe.
adjust,
Or a mix.
and if you should adjust that 120 billion for inflation and compare it with any other fiscal spending in the economy, it would be like twice as what Gilbert was based on assessments.
Yeah. So, just moving on, the third question, which was from the social media, had asked, how do you plan to grow the economy in light of the challenges of COVID? So, Dr. Clark mentioned that this would be through, I'm sorry, that was Mr. Golin, through rural development, global outsourcing and manufacturing, the grant to fix houses. But what I wanted to ask you guys, is do you guys think that the youth, let's call it a utility grant and the quality, the grant to fix houses that are in a certain condition will have an impact on economic growth?
Uh, I think any money being spent in a time like this now should be put to things that can actually produce and you can actually get a return from it. Simple as that.
Yes, I
Houses
agree
now
with Ivy.
in a crisis like this won't help. It's like you're spending money and getting no return for it, and then what it done to your debt. So we have to look at measures on things. For example, we are in a digital era right now, the fourth industrial revolution, and we see now where, for example, they find that many people should actually be working from home, and many people are actually stubborn with that. And there are a lot of ways in which you could probably be use the digital, create new jobs and stuff like that. So I don't think spending on just house if you're not gonna fix up infrastructure like Wi-Fi and those things.
All right. What you guys think about? Um, no, sorry, I was going to ask Kirk's opinion on how you think that would affect economic growth, if any at all. Because I mean, the understanding is that to build homes, Ivy, that would employ people,
Yeah, I
right?
was gonna say if it is in the context that now we are looking to do this remote work thing, then develop that farm infrastructure. I don't know.
Okay. Sherry's asking, did they mention actions for recovery and opportunities to offset revenue loss? I don't remember them mentioning opportunities to offset revenue loss, but they did speak about recovery. Matter of fact, I think the government, which is of course the JLP government, did do the, an economic recovery plan, and I believe they
Yeah,
have a
that's
macroeconomic stability as one of their pillars in the manifesto, and I do believe the PMP spoke to that as well. All right, so moving on to the next section. So they had mentioned that the unemployment rate has fallen. I think Dr. Clark had mentioned that that has fallen. That one was easily proven because the unemployment rate has been the lowest it has been for a while. Matter of
yeah.
fact, I think it's for a good while. Um, and that's from a recent peak of 16% in 2013. Annual inflation has been relatively low compared to our previous years. But I mean, even before 2009, inflation was almost consistently in double digits. It was very high before, so it has come down. And inflation would have been coming down on an achievable 15. The prevalence of poverty, and this I believe is the poverty rate.
Yeah, prevalence. Yeah.
Yeah, so this is the poverty rate. Why we don't have the 12% here is because we just don't have a copy of the document that has that figure. So we didn't want to include something that we have not gone through and assessed. But the last poverty figure before that was 13.3%, and poverty has indeed been coming down over the years. Do you guys have any comment on this?
Well, Simon, I was having a discussion with someone recently, and we could say that the person is a professional. They work in the formal economy, services sector, and we could classify the person as middle income. And even though we can look and we can see that the poverty level has been trending downward, what's concerning is the quality of life of our citizens who are middle income in nature, because many of the policy measures that would come to benefit our citizens are usually targeted at persons who are low income, and persons who are on the higher income bracket do have certain advantages because they have a higher income. They can buy assets, they can take advantage of certain things. But what happens to the persons who are in the middle? Our professionals, the people who are teaching, the people who are passing on skills and training other people. I think we need to look at having more creative and inclusive approaches of measuring quality of life, specifically for those in the middle. So I just wanted to throw that out there based on a discussion I had recently.
Okay, I understand, Julian.
Yes, I man, because most of us on this call are middle income, so I have to look out for us to, don't it?
Julian, we know about my little bit of money.
When I do the survey there, I never participate.
Yeah, so Steph is asking, can I get a short summary of how poverty is calculated? Any of the other guys on here have any details about that?
Check. Starting.
Yeah, so basically,
The
Steph, I
last
believe
time,
it.
the last
Mhm.
time I called statin, I didn't get a clear definition.
Yeah, so I read the last JSLC recently, and basically they have a poverty line, and they calculate the consumption of different communities across Jamaica, and people that fall below that line, they have different types of poverty. So they have food poverty and overall poverty, and then they assess based on that. But Steph, what I can say is shoot me a DM on Twitter, and I'll send you the methodology for it. All right. I think I can find it on starting. All right. So moving on, guys. Segment 2 talked about foreign exchange and the reserves. So the question here, I believe, was from Kalila. She had asked Dr. Clark, the J dollar has now passed 150 to 1, depreciating about 12% since March. What is the government doing about this? When I heard this question, the first thing that came to mind was,
Government
government supposed to do nothing about that.
monetary policy business that.
Yeah, that's really yeah. But why you guys think? So so um Dr. Clark went on to explain that JLP is committed to macroeconomic stability, low, stable, and predictable inflation. We have high gross reserves. We have high net reserves. But I believe that upon re-listening to what he said, he spoke about macroeconomic stability, and he basically pointed that the governor. So he said that the governor speaks about this. The governor speaks about that. So even though he probably didn't explicitly say that, look, this is not something for me. This is something for the governor of the Bank of Jamaica to talk about. He did allude to that. In response to that, Mr. Golin said that the Jamaican dollar has devalued by 14% since the start of 2020, and this has added over $100 billion in debt. How does devaluation of the currency, guys, add increase our debt amount?
Well, a lot of our debt is denominated in US currency. So it means that if the J dollar depreciates against the US, it means that the debt stock, or the debt burden, I should say, effectively has increased, ceteris paribus, meaning all else being equal.
Okay. Okay. Okay.
And
Understand.
yeah, go ahead.
Yeah. So I was just continuing on with what Mr. Golin said. He had said that the reserves dipped. Yes, Timar, you're right. It increased in J dollar, in Jamaican dollar terms, right? So he had said the reserves have dipped by 400 million US dollars. But I think this is something that we all would have discussed already. Right? I remember us talking about this as it pertains to the reserves falling over said period. Nasnani said, and the revenues are denominated in Jamaican dollars. Absolutely. The Jamaican government earns a majority of its income in Jamaican dollars and it pays US dollar debt. So naturally, when the value of that US dollar debt goes up, they have to pay more. And Mr. Gooding went on to call him Mr. 150 to 1. I've never heard any housewife call, call,
Me not
call him.
even know the housewife.
Yo, that was a new one. Yeah, that was just
Oh
some
boy.
political fear, you know?
Yeah, man.
So there was a follow-up question by Kalila because, of course, Kalila went on. She said, yes, we have enough reserves, but you did not hear, well, I did not hear you say what will be done. And I think Dr. Clark reiterated that the BOJ governor expressed, so as I said, I don't think he explicitly said that, look, this is something for the governor and the Bank of Jamaica to, this is in their mandate. I'm the Minister of Finance and we're aiming to make the BOJ independent. So I think from that perspective, he approached it as best as he could. Yeah, over that period. So he said that the BOJ governor expressed that he will do as much as he can to ensure that FX rate does not interfere with inflation objective set for them. Ivy and Kirk, how would the FX rate affect their inflation target? I mean, the BOJ has always been saying that, you know, the depreciation of the dollar don't really affect them.
Simon, I think the relationship is the other way around. That's why they have been more preaching on don't be too concerned about the FX rate movement, but be more concerned about the inflation being in the band, because when it is that the inflation does not remain in the band, then that is a contributory factor now to the exchange rate sliding even further.
Okay, so sorry. So tell me that again. May I try to process it? So you say it's really from inflation to FX.
Yeah, that's correct. Yeah, that's correct. It's from inflation to FX and not the other way around.
But how that work though, Kirk? Me no want pressure you about. Me actually want to understand and break it down for the guys.
All right. So, in terms of inflation and the effect that inflation has, um, the it affects our purchasing power. Basically, simply put, the value that the J dollar has lessens with the higher the inflation rate. And say our inflation rate is out of the target, meaning it's above the 6%. I think 6% is the upper limit. Then we know that our currency is losing its purchasing power, and that can have a precipitous effect, because that now means that okay, the J dollar loses its purchasing power, and if you do that relative to the US dollar is quote unquote now worth more. You can purchase more with the US dollar, and then now it can lead to a situation wherein persons will start viewing the US dollar as a safe haven if it is that they don't believe that inflation will actually remain in the target range. So they will probably start to hoarding. It would lead to a situation in the far extreme case where there now will become a hoarding of the US dollar. I think something like this was experienced in the 1990s, where we had double-digit inflation, and then the exchange rate, sorry, they shoot up by over 100 and something percent.
Yeah. Okay, I understand. And you know, I've actually, I was actually thinking about it probably another way. I you can tell me if I'm off. You know, I was saying, okay, so we do have goods locally that merchandisers buy from abroad and may price based on the US dollar. So your argument is correct from that point. And when they increase the price of their goods because of the higher FX rate, then that reflects in a higher inflation rate. But just saying it out loud, it sounds cyclical. Because it forces the exchange rate up, which forces the inflation and etc.
Yeah, I see where you come from. I see where you come from. But
Yeah.
in terms of which one would have the greater impact, I think it is the first situation where inflation leads to FX, seeing as most of the goods, well, most of the goods which would have been priced based on FX movement would not be would not have such a heavy weighting on the inflation basket or the calculation of inflation, because I'm not sure of the exact composition of the basket right now, but I can say that those goods which are likely to move in price based on the being priced based on how the exchange rate moves, they will not have as great an impact on inflation rate.
Yeah, and I think I've heard economists at the BOJ. I think it was one of the deputy governors or the head of research over there, but he had mentioned that the pass-through rate, and the pass-through rate is just how wait a second now, the FX rate may transition into higher inflation, is actually pretty low to support what he just said. But Kirk, that when you go on Amazon now, yeah, you don't even look on the exchange rate at 150. Amazon exchange rate probably 160 or 170, right? So
151.
True.
151.
yeah, so
The
people were shop.
151 too. I 152.
Yeah, so people were shop on Amazon, and other international based sites were like that. They may say, look, we are get hurt. I can't buy my special
Perfume.
grade items online anymore, and this a beat we. But
Yeah,
it
Kurt
goes
can't
back
buy
to
him perfume like one time.
yeah, and Kirk can't buy the whole of the cologne. So it's a
And
beating.
yeah, man. And
Mhm.
also noticing another trend. If you realize now, most Jamaicans now, some people even want their rent to be paid in US dollars and other stuff.
I realized that the upper middle are the nice apartment them in Kingston 8 and Kingston 6 and the desired communities. I don't think it's necessarily a new thing. It's probably more prominent now.
Oh yeah, man, I've said the prevalence.
Yeah. See, yeah, it's more prevalent now where you have more properties being quoted in US dollars. Yeah. So this is just a graph for the exchange rate, which we just spoke about. These are the reserves. So the minister did say that as at the end of July, we had about 2.7, $2.8 billion, billion US dollars in net international reserves. That was correct. So a question was asked as it pertains to the priority of policy. You guys remember that one?
No, no.
Yeah. So may I
I don't
try to
know.
find
No.
it? Yeah. So Dashan asks, given COVID-19, they're saying when you're going to government, things may be different. To fund all the projects, which one of these projects in the manifesto will be prioritized? And this was asked to Mr. Golin. And Mr. Golin stated that you're more than likely have to phase in the implementation of some of these things, and I think that's a much more muted um, a much more muted way of explaining the wealth plan, because I don't think Mr. Crawford had explained it like that the first time. You know, Mr. Golden also said that the quality living plan, it would benefit over 1 million people. I know I won't hold them to the small mistakes, but I think that's a mistake because I believe between the NWC and and JPS, they have about 500 or so residential clients, right? Now, a lot of people that have JPS that are connected to the JPS are also connected to NWC. So if you add them together, you're really double counting. So really and truly, it's about 500,000 or less. And the plan to upgrade houses is just 10,000 people. So it couldn't be nowhere near 1 million people. But you know, when you're presenting live and you're debating live, there are bound to be some mistakes that come out. I know that happens to me as well. So never go pressure them. Timar is saying note that low oil prices save us as well. Oil prices low. I haven't
I think Timar is speaking within a longer price trend. So compared to
been check
2001, 2002, 2003, those levels when oil prices were higher, during the tenure of President Bush and so on, relative to now, oil prices have come off significantly. Oil prices even came off quite a bit in 2015, I believe. I don't remember what the factors were behind that, but I know that they started to trend downward aggressively during that time, and they have picked up a bit, but also because of the COVID weakening of global demand, oil prices have pulled back. So I think Timar is referring to a longer time frame when he's talking about oil prices being low. So it's low relative to where it has been for most of the past 15 years or so.
Oh, but Timar just clarified. So he's saying they went down precipitously this year. But when me asking Timar is if they went down precipitously in Jamaica locally.
Oh,
So I
oh.
know for them go down
Oh gosh, man.
globally,
That's
but
true.
remember we still have that
Oh,
little
oh.
with that state agency that we shall not mention
Yeah.
Yes, yes,
as
yes.
well. So
And that complex model.
but
Man, I
I
saw
knew
where Owen was making a comment where I think he was saying that yeah, many people who are relatively poor, but if some people should actually lose jobs now, then they would actually fall right into poverty right there and then. I think it was a comment like that he had made.
yeah, that's true. And you know, I usually call that the working poor. And I know, and me I gotta be honest, when I just start work and up to a certain point, I won't tell you if that point has passed or not. But if me did lose my job, if me did lose my job at a certain point in my life, it that me have to go back a grandma. You know, of course, me could pay no rent, me could pay for the car, and me could help with the bills or nothing like that. Yeah, because naturally some young professionals when they start they don't really have that capital buffer. But there are people that um
They are earning enough to have
yeah,
that capital buffer, but have it.
and you know, funny enough, based on and stories that I've heard of Jamaicans, there are people that may look like they have that capital buffer, right? So they may very well be driving a BMW and living in a USD priced apartment, have a very nice job, but if they lose that job, you know, they lose the quality of them life almost completely. And I mean the quality of life, I mean how they live. So I think there are just two more things to discuss. So Dashan, the ninth question was what's the total cost of the plan? Right? And um he had asked that to Mr. Golin.
Yeah.
So of course,
I
Mr.
wrote
Golin.
that.
Sorry, repeat.
I think he said around $70 billion.
Yeah, man, about 70 billion. He said that 15 billion would be absorbed by the public, and 50 billion around that would be found in the consolidated fund. Guys, and remember when NHT money, the
Right.
contributions get spent to the consolidated fund and everybody, and well, based on what was said, not even by me in the public space then, those funds in the consolidated fund were just pulled to fill certain things. We have to be a bit more specific than consolidated fund though. He did go on to say that the PMP did cut taxes over their period. In government, they cut the GCT from 17.5 to 16.5. They cut the corporate tax from 33 and a third for general companies to 25%. Mr. Dr. Clark reiterated that poverty is down 40%. It's something that he said very often. The budget for the revenue tax revenues are up in the budget, which is true, and the capex expenditure has been up by almost 3 times. And I mean that can just be seen over the last couple years. The Mandela project has been taken on, Hagley Park, Constant Spring Road, South Camp Road. We'll have the East Coast leg of the highway being built now. So, but the question I wanted to ask you guys, Kirk, Ivy, and Julian, Dr. Clark spoke of moving from direct to indirect taxation. I think that probably flew over some people's head. So I wanted you guys to just briefly tell us what direct taxes are versus indirect taxes.
All right, direct taxation, from what I can remember, is more related to taxes that come directly out of your salary, like PAYE and other form of income tax, while indirect taxation comes on items that are driven by expenditure, like GCT. I had that right? That was straight from memory.
More then you pay relatively more. For example, with GCT, and direct taxes come directly from your income, so usually income based. All
Yeah,
right, cool. But you know,
because
I
the
usually
argument is that
I
indirect
always
taxes.
hear this being mentioned, the move from direct to indirect taxes. But the JLP government now actually cut the GCT, which is an indirect tax.
Boy,
So
Simon,
you know, at that point, it never, even though it
But
helps, it really helps, and we really appreciate it. It never really seemed intuitive given the overall policy direction.
I think in the near future,
Simon,
it's likely
really,
that we might have to revise that.
yeah. Continue, Julian.
No, that's all I was saying. I'm saying based on what's going on, it's
Some
highly likely that we might have to revise that
seem like
tax code.
having some issues. Kirk, Ivy.
Yeah, Simon.
Oh, you guys were talking a while ago. I couldn't hear.
Oh, I was saying that it's highly likely that we might have to revise that cut.
Yeah, I was talking to Simon. Simon, you remember the conversation we were having about 2 or 3 days ago, really the same thing? I was basically telling Simon that I'm of the belief that the cut in GCTs it probably will be reversed, even though it might be a very unpopular move.
Okay, understood. Somebody's asking if we analyze the question to Mr. Golin on how the 130,000 houses will be funded. And I don't remember that question specifically, but I remember he had said that funding overall would come from monies taken from public bodies and monies from the consolidated fund. And hold on, let me just shift to the next slide. So the next thing that we wanted to look on, and I guess the next major thing was Kalila dropped a bomb. I mean, an expected bomb. What happened to 5 in 4? I know when she asked it, I was like, boy, this. Hold on, it seemed like the guys are have dropped off. Kirk, you hearing me?
Yeah, man, I hearing you.
Ivy?
Yeah.
Yeah, man. What did you guys make of that question? Well, on the answers, what happened to 5 in 4?
It's a tough question.
Yeah.
He was grateful for the question, but I don't really think he did mean it because the question kind of stick him up. Him sidetrack and step around it and beat around the bush and say it's a means to an end, which is true. In the 5 in 4, I think at the end of the 5 in 4, as much as they wanted to see the number, 5, they had also wanted to see that employment has increased. Um, there are certain macroeconomic variables which have hit their targets. Inflation remains low, etc., etc. However, at the end of the day, I still believe that they really, really wanted to see that 5 in 4. So even though they have hit all those targets, and I think I'm going to say something which makes what he said last night look bad. If it is that employment is increasing by such a huge multiple and GDP is not increasing by the same amount or by that same multiple, it stands to reason that productivity is actually continuously decreasing. So that would make the 5 in 4 plan look even worse.
Yes. I agree with you, Kurt. I made that exact tweet at that time because the thing is that you had campaigned on making the economy grow by 5% in 4 years. Yeah, well, you did not achieve that, so you're looking at other variables. But the thing is that you said that you are going to make this variable actually grow. So why didn't it grow? And as I said, it has a negative impact on productivity growth. And Jamaica for a very long time now, the importance that they put on GDP growth, that same importance is not put on productivity. And based on our economy is structured, it cannot grow by 5% in 4 years like that. It is just not structured that way.
So
So
basically, sorry, continue.
yeah, so I'm saying basically, if you look at the data, if you compare us against other well, just compare us with our neighbors. The Trinidad, well, I really can't really compare Trinidad and Tobago because they have oil, so that's really a very unfair comparison. But if you compare like the Dominican Republic, those countries are basically overtake us. St. Lucia, Barbados, all those countries has gone ahead of us. So really and truly, the jobs that they are saying that is adding to the economy, they have low value added, and they won't allow output to really grow.
Well, we have the data for prove that.
Yeah.
So if you look at the screen now, you'll see a graph that Ivy contributed um, that has a real wage. So this is wages adjusted for inflation, yeah?
Yeah, that is real. It's real adjusted for inflation.
And you realize that, well, it's Ivy's your graph. So if you could just quickly, 30, 45 seconds, just explain.
Okay, so you know, you have compensation of employees. So when you basically adjust that for inflation and then divide it by the amount of persons that are actually employed, then that will actually give you the real wage. So yes, people the compensation is increasing, but because inflation is increasing at a faster rate than the compensation, then you find that the real wage is actually decreasing. What does that mean? It simply means that for example, in 1993, you had $500 and you could basically buy 6 patties. In 2020, you still have the same $500, but you only can buy 1 patty. So the real is in terms of the good that you can actually purchase with that money. So for example, I can tell you that if you should look at statins or PIOJ's data, there is consumption there. They're showing the consumption for rural areas and also city and also the urban areas. And you will see that nominal consumption. So nominal consumption is the money. But when you adjust that nominal consumption, you will actually get the real consumption. No, nominal consumption you would see that it is actually trending up. But the real consumption, that is actually decreasing. So that is why I hear some Jamaicans are, well, I can tell you that uh, on average between 2016 and 2019, 76% of tax-paying Jamaicans, excluding the self-employed, earns 1.5 million or less. 76% of tax-paying Jamaicans. So if you should just oppose that now with consumption going down and the real wage going down, then you can see the dire problem that we're actually in as a country.
So Ivy, Timar has a question for you.
Yeah.
He's asking which sectors can we focus on that have the potential to give us the highest output or income per head, or that are most productive.
All right, so the most productive sectors in the economy now are the financial sectors, financial, and also you can see that the essential services sector. So for example, electricity and water supply, those sectors are very productive based on my calculations. But for economy to go, you need those sectors to be very productive, the essential services. So the financial sector has been one of the sectors that has really been pushing the thing forward, because at the end of the day, those sectors are more likely to employ technology and innovation.
You know, Kirk made a good point, and I want to jump back to that. So basically, so Dr. Clark spoke of means to an end, with the economic growth being the means, and certain things that we have started to achieve being the end. So the capital market has expanded, and there is a lot of increased confidence, business and consumer confidence in the market. Um, Poverty is down 40% according to the minister. Unemployment is down to 7.3%, a number that I don't think we've seen um, in our modern history, if I can go so far. So all of these things seem to be lining up. But Ivy and Kirk, all of these things should be growing the economy. So that means that there is something wrong. And you guys pointed to productivity being a major problem. There is clearly something wrong that is not linking these things that are supposed to increase economic growth, but they are clearly not. So I was thinking, Ivy, and I
Yeah.
was saying that what if over the past couple of years, what we've seen is that the successive governments um, have done well in instituting policies that are aimed to cut the debt burden of the country. So our debt burden has gone down, and the private sector capital market has gotten more comfortable with investing outside of Jamaican government bonds. So they've started to put their money in real estate. They've started to put their money in the equity market. I'm wondering if the reduction in poverty if the increase in employment is, well, it's clearly not an expansion in real terms of the economy. I'm wondering if it's just a shifting of capital in the economy. Um, you think that's plausible or no?
Well,
Are we just shifting money to industries to grow?
thing. But the thing is, Simon,
Mhm.
I think that for us to really grow, or they said, well, one thing is that when I usually look at the elections, those are one of the things that normally cause us to lose out in terms of when one set of policies were instituted, when a different government forms the different party forms the government, they normally change that. But as you saw in the last couple of years, we have had some type of policy continuation, and that has really put us where we are today. Well, pre-COVID, right? So now the thing is that they need to really. I've always been one to advocate for more investments in research and development and more money for innovation and things so that we can produce some, or at least increase the probability of getting high value added goods or producing that. Because as I always said, we need to move away from this producing this banana chips thing and start do some form of microchips thing. If you understand what I mean. So it's really, my thing is that Jamaicans are not, they don't lack talent or creativity, but it's just the facilitation. I've seen where more time you might be passing on the road and you see a guy driving a car. I've seen another guy the other day where he was building some robotic stuff from out of garbage trucks and stuff like that. But these things are not being put into um, a space where they can actually develop and actually generate some form of income for the country. I'm not seeing where that is actually happening. And we are going into a digital era and it needs to be facilitated.
Yeah, National 93 is saying that digitization or tech steepening in the financial sector has been slower than it needs to be. I agree. And it's probably one of the positive, well, let me not use the word positive. It's probably one of the opportunities that have arisen out of in the crisis, in that a lot of um, companies are now being forced to digitize and innovate and change their business model. They've been forced into a position where they're uncomfortable. Um, Owen was also saying that in a small open economy, an open economy, guys, just mean that it's an economy where you can trade, where you can sell goods to another country and buy goods from other countries. Needs to be on digitizing and providing high value added services that utilize technology.
Yeah, man, Owen, that's for real.
Ken Roy says, I'm surprised no one has promised to lower import taxes on technology or raise the tax exempt landed price. I believe that probably why them allow that one is that we have the customs act, the new customs act that's currently going through the paces where things like that may have been or may be addressed. But my understanding is that a government no usually want to touch them border taxes, particularly a small net importer or a country like Jamaica that imports most of it, that imports more than it exports, because these border taxes usually make up a good amount of the total tax revenue.
Yeah, Jamaica's makeup is about 40% of total tax.
Oh, so you're saying Jamaica's total border related taxes is about 40% of total tax revenue.
Yeah,
Ah,
that's
interesting,
hefty.
interesting. Well, guys, I think we kind of run a few minutes over. Let me just first thank Wendell Ivy Kirk Douglas, Julian Morrison. I thank David before and Horton, and of course, thanks to Ramon um, for contributing today. I really think that this discussion kind of breaking down exactly what was discussed. It was particularly refreshing to me because nobody seemed partisan or biased. But I know everybody has their biases, um, but nobody's brought out those biases and really relying more on the data and having a civil discussion. So, I mean, Ivy, if you could, if each of you could just give your last minute in just saying what you thought about the debate and tell me who you think won. Ivy, you first.
Well, I think Nigel in the debate, man.
All right, what do you
Oh
think
my
about the
God,
debate
I
overall?
think when it, even though both of them, what I was actually looking for is how them are going fund their plans, really, really. But that didn't come out. And as I said, I think that how they're going to fund their plan is actually by actually raising some taxes, but election is September the 3rd, so they can't come before September the 3rd and say that, hey, we're going to raise taxes. They have to actually form the government first, and then they say what they actually, or how they're going to actually fund their plans. So,
And
yes,
and
that is coming.
yeah, and Ivy quickly, Deidre just put, and this is the last question, but I think it's important for those who don't necessarily understand, the whole
All right.
productivity and all of that.
So productivity is simply a ratio of input to output. So how much from the input that you actually put into a process, how much output you get from it. So ideally, you want to get as much output from an input that you put in. So if for the Jamaican economy, how it is calculated, it is the value added GDP divided by the amount of people that actually made that GDP. So that is the employed labor force. So if you have a case now where you're adding, so it is in percentage. So if you're adding a greater percentage, or the jobs that are being created are going faster than the output that those jobs should be created, then the productivity will actually fall. So if you're adding jobs that are not high value added, then that will actually make the productivity levels actually fall.
All right, Julian, you're 1 minute. Who you think won? What did you think about the debate?
Well, I think the debate was very, well, it was entertaining to say the least. It did have some informational points. I think the points were clearly articulated. However, like Ivy mentioned, I would have wanted to hear more particulars about how they will be financed. But the elephant in the room is taxation. And the last time bitter medicine was mentioned, that person, didn't get a chance to form office. So I think politicians are trying to be cautious, and trying to toe the line. I think Dr. Clark came out in the end overall. That's what I mean. Because I think Mr. Golding started off slowly in terms of his pace, but he picked up during the course of the debate. But what I didn't like was that there are times when he veered away from topics of finance. So I would give it to Dr. Clark overall for at least staying on topic and speaking to pertinent points in detail.
All right, so Ivy saying Dr. Clark, and Julian said Dr. Clark. Okay, Kirk, what do you think?
All right. So firstly, I enjoyed the debates. It was, um, to be honest, I did not expect them to explicitly say how. As much as I wanted to, I didn't expect them to explicitly say, okay, we're going to levy X or Y taxes, or we're going to take on more debt, because I know how that can look in the public. Um, either party could have used it as a talking point to say, well, look at this party. They are actively telling you that, well, we're going to increase our debt to GDP, so the poor man will be more burdened, or this party is going to tax you more, or whatever. So I did not expect them to, as much as I wanted them to, I did not expect them to actually say. No, to who won the debates? The debates were closer than most people expected them to be. I'm going to be frank and tell you that Nigel won the debate. His strong start gave him the edge, and then his powerful closing. But Mark Golden made some very sound points, and he actually held his own. But in the end, I would give the victory to Dr. Clark.
All right. And I mean, my input, I already shared it already. No, I honestly thought that Dr. Clark would have probably come out of the debate a bit ahead. But you know, even though Mr. Golden um, started out a bit slow, came off as nervous, etc. He really picked up. He made his points, and you know, in reviewing the debates, um, I think I'll stick with what I originally said about Dr. Clark winning. I think as it pertains to as it pertains to the finance debate itself, my expectation was the JLP talking points are going to be very cliched. It's what they've been saying for a while. Unemployment is low, poverty is low. We've built this economic growth. We had X consecutive quarters of economic growth. Dr. Clark has been very consistent on that, and the numbers back him up. The capital markets are vibrant. We listed Wicktown, we listed Trans Jamaica, we are increasing wealth, etc., etc. Right? So I expected that. So my expectation was that the PMP, they would sit down and say, okay, these are the points, and this is how we're going to counter them. I expected him, Mr. Golden, to stress a little bit more on 5 and 4, but of course it's a debate, so they have limited time, and the questions are asked to them. But Mr. Golden really did come out better than I expected, and I think he finished up better in the latter part, while Dr. Clark started better.
I
But that's
think I also agree that Mr. Golden held his own because he hasn't had the portfolio for a very long time. For his, I mean, looking at his political career in its entirety, I mean, he shone very brightly as justice minister, but and we know that he has financial acumen, very high financial acumen at that, but we didn't know him in this capacity. So I think in that context, he did well.
and well, my final comment is just to look at the last debate. Boy, you can really see the difference with this debate, because I mean, the guys before were okay, but I guess the points that they were talking about were a bit more qualitative, right? For this debate, both sides came with their numbers, and this is what was done. But I guess what could have been improved on is what we will do and how we'll do it, right? And over what time period and cost and etc. like that. But I take Kirk's point. They would want to come on a debate and talk about things in that much detail. But um, thanks again, everyone, for coming. Thanks for all of our viewers. I know I'm really tired now, and you know I really appreciate it. And see you back next month.
Yes, and a point, Simon. Jamaica has recorded 141 new cases.
Oh wow! Amir the Chadwick Boseman died.
Yeah.
Oh boy. Why 2020, 2020. Anyway, guys, thanks again for coming. See you next month. Much respect. And this video will be on YouTube after. Don't forget to subscribe. Subscribe to the channel before you leave. Please
Yes,
subscribe
and follow us on social media, please.
and follow us on all social media. So everybody is saying thanks, guys. Thank you again, Kirk, Ashdeen, and all the Stocks on the Rocks team who work behind the scenes to make sure that this
Big
is
up, big up.
successful every month. Thanks,
Yes, sir.
Nasnadi. Thanks
Yes,
for
the team.
Yeah, man.